Coinbase Global Inc., trading under the ticker Coin, is the largest publicly listed cryptocurrency exchange in the United States. It serves as a foundational pillar of the digital asset ecosystem, providing retail and institutional investors access to buying, selling, and storing a variety of cryptocurrencies. Since its founding in 2012, Coinbase has expanded its operations significantly, evolving from a simple exchange to a full-stack infrastructure provider for the decentralized internet economy. The company's platform includes brokerage services, a proprietary trading desk, custody solutions, staking, and institutional infrastructure. At the core of Coinbase's business model is transaction revenue, primarily derived from fees charged on crypto asset trades executed on its platform. This source of revenue is highly sensitive to market volatility and trading volume across retail and institutional participants. Coinbase generates additional revenue streams through subscription and services, including custodial fees, staking income, blockchain rewards, and interest income on customer custodial funds. These segments, while still smaller in scale compared to transaction revenue, are growing in importance due to their recurring nature and insulation from market cycles. As the company transitions toward a more stable earnings model, these revenue streams will play an increasingly vital role in improving margins and financial predictability. In 2024, Coinbase reported revenue of approximately $6.56 billion United States dollars, more than doubling from $3.11 billion United States dollars in the previous year. This dramatic increase was driven by a resurgence in crypto trading activity, heightened institutional engagement, and the market-wide rally of digital assets, including Bitcoin and Ethereum. Net income surged to $2.58 billion United States dollars, reflecting an extraordinary increase in profitability, especially compared to the 95 million United States dollars recorded in 2023. Free cash flow also improved significantly, hitting $2.56 billion United States dollars, underscoring strong internal cash generation and operational leverage. Gross margin was maintained at approximately 86%, and operating margin expanded to 35%, demonstrating Coinbase's ability to scale its cost base effectively even in a volatile industry. The company's liquidity position remains strong. Coinbase maintains a current ratio of approximately 2.52, indicating that it has more than twice the current assets needed to cover current liabilities. It carries minimal long-term debt and in fact possesses negative net debt, meaning its cash reserves exceed its outstanding financial obligations. Return on equity stands near 16%, while return on invested capital is slightly lower at 3%, indicating modest efficiency in deploying capital despite the company's rapid growth. Coinbase's management team is led by co-founder and chief executive officer Brian Armstrong, who has been instrumental in steering the company through regulatory hurdles, public scrutiny, and the overall maturation of the cryptocurrency industry. Chief Operating Officer Emily Choi and Chief Financial Officer Alicia Haas round out the core leadership. This team has demonstrated the capacity to navigate both bull and bear markets in crypto while aggressively expanding the business through strategic acquisitions and product development. One of the most impactful strategic moves by Coinbase in recent years was its acquisition of Deribit for approximately $2.9 billion United States dollars in May 2025. This deal significantly bolsters Coinbase's footprint in the crypto derivatives market, a high-growth segment offering perpetual swaps, options, and futures products. By acquiring Deribit, Coinbase gains exposure to recurring revenue streams from leveraged products that cater to institutional and sophisticated retail traders. This complements Coinbase's existing product stack and enhances its competitiveness against non-US-based exchanges that currently dominate derivatives volume. Coinbase also continues to invest in decentralized finance infrastructure and token issuance platforms, such as its acquisition of Liquify, which strengthens its presence in the programmable money space. These acquisitions align with Coinbase's long-term vision of becoming a gateway to Web3, rather than merely a trading venue for digital assets. Unlike many traditional financial institutions, Coinbase does not currently pay a dividend. The company has consistently chosen to reinvest profits back into business development, platform enhancements, and strategic M&A activity. This capital allocation philosophy is appropriate for a high-growth, tech-oriented company in an emerging industry. The valuation of Coinbase is complex due to its cyclical revenues and rapidly evolving business environment. Analyst consensus places 12-month price targets between 260 and 385 United States dollars, with some bullish targets exceeding 500 United States dollars. The consensus average target is approximately 305 United States dollars, suggesting modest downside relative to the current price. However, discounted cash flow valuations offer a more conservative perspective. Several independent DCF models place Coinbase's intrinsic value between 167 and 242 United States dollars per share. These valuations incorporate a range of assumptions, including discount rates between 7 and 20%, long-term revenue growth rates between 15 and 25%, and terminal growth rates close to 2%. The DCF models highlight the risk of overvaluation based on the company's current market price, particularly if crypto volumes stagnate or regulatory actions intensify. More cautious models, using high discount rates and conservative growth estimates, have produced valuations as low as 31 United States dollars per share. These models emphasize the downside risks associated with market dependency, regulatory challenges, and competition from decentralized exchanges. Even moderate DCF scenarios often yield valuations in the range of 100 to 170 United States dollars, far below current market prices. Peer benchmarking reinforces Coinbase's premium status. Compared to competitors like Robinhood Markets, Block Inc., Binance, and Kraken, Coinbase commands higher multiples across key metrics such as enterprise value to sales and enterprise value to EBITDA. Coinbase trades at approximately 14 times sales and over 120 times trailing EBITDA, while peers often trade at significantly lower multiples. This premium reflects Coinbase's institutional credibility, robust regulatory compliance, and broad infrastructure platform. But it also introduces valuation risk if future performance does not meet elevated expectations. Coinbase's high valuation may also be attributed to its strategic positioning as a gateway to institutional crypto adoption. Its custody services, integrated trading and settlement systems, and regulatory alignment position it favorably relative to peers operating in less transparent or offshore jurisdictions. However, this also exposes Coinbase to a more rigorous oversight regime, particularly from United States regulators, which could impede innovation or limit product offerings. Technically, the stock has seen significant volatility. In the last 12 months, it has traded in a wide range from under $100 to over $400. Recent momentum has been positive, with the stock breaking above key resistance levels, driven by surging Bitcoin prices and optimism about regulatory clarity. A sustained move above $400 could confirm a bullish breakout, while any retracement below $300 could signal a shift back toward valuation-based selling. Investment recommendations should take into account both technical momentum and fundamental valuation. For conservative investors focused on margin of safety and intrinsic value, Coinbase may appear overvalued at current levels, particularly in light of DCF estimates suggesting downside. These investors may consider waiting for a pullback to below 250 United States dollars before initiating or expanding positions. For growth investors with a longer-term view, Coinbase's exposure to crypto derivatives, Web3 infrastructure, and institutional platforms may justify current multiples if execution remains strong and crypto adoption continues accelerating. Accumulating shares in the 300 to 310 United States dollar range could provide balanced exposure to upside while controlling risk. Momentum traders may find opportunities in the stock's current trajectory, especially if crypto markets remain bullish. Breakouts above $400 could lead to additional rallies, particularly if trading volumes continue to expand and Bitcoin approaches new highs. On the downside, support around 270 to 290 United States dollars may act as a floor, providing entry points during market corrections. In conclusion, Coinbase is a dynamic and fast-growing company at the forefront of digital finance. Its evolution from a crypto exchange to a diversified platform with custody, staking, derivatives, and institutional infrastructure positions it for long-term relevance. Management is experienced and has shown a willingness to adapt and invest for the future. While the stock's current valuation appears rich based on discounted cash flow models and peer benchmarks, it reflects a premium for Coinbase's leadership, regulatory compliance, and growth potential in a rapidly expanding asset class. Investors should weigh these strengths against the inherent risks of market cyclicality, competition, and evolving regulations. The decision to buy, hold, or sell Coinbase stock ultimately depends on one's risk tolerance, time horizon, and belief in the long-term viability of the digital asset economy.